You guys are starting to combine scalping with the 2-minute EWO. If you start doing this, you're going to run into problems. You cannot condition yourself. You cannot condition yourself for both, because in the 2-minute EWO, you allow yourself to work through all sorts of this. When you're scalping, you never do, right? So if you're like, oh, today I'm going to trade this 2-minute EWO, but then you start trading it like a scalper, they're two different things. They don't trade the same. It's not the same mentality. You don't trade it at all the same way. It's not at all. Pick one or the other. I'm going to do this or I'm going to do this. The other one doesn't exist. 176 is where we're looking at. It needs to break. So you already know, partner, what you need to do, because if you go back a little bit farther, you don't have any information to go on. You already broke this 174 level, which was its previous high, previous day. So that means we need to go back farther in time to start to get key critical levels. Now look at this. There's your 176. Moving up to, if it can break 176 and hold, 177.89, which is actually 178, but you know everybody is early. Those are your two next critical levels. See them?
Yep. All right. So my question is, when it gets up that high, then it doesn't matter how far back you're going in time to get your next critical level.
Yep. Yeah, you could go back 6 months, but it's going to apply. Yep. You go back until you have history and it will work. Notice we went back to 176 and look at where it's pulling. And this was right over a week ago. See it?
Yep.
Now, the same thing applies to you as everybody else. If you see this, right, it goes up, 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 up. Let me flip. Hold on. So same thing applies to you. When you see this pull back, this is where you can shave, right?
Mm-hmm.
So we shave, it goes up, comes back, shave, goes up, comes back, shave, so on and so forth. Otherwise, let it ride, or you can use a trailing stop. Look at what it's supposed to be. And in this case, I would normally, since you're holding a little bit longer, looks like your trailing stop is going to be between 29 cents and 47 cents. But if you cannot afford or don't want to afford that much of a trailing stop, what I would recommend instead is we shave some to get rid of it, get it down to a level where then you could set up a trailing stop, right? Because $1,000 at 47 cents is a lot, right? Or
Yep.
shares at that. But 300 shares at 47 cents, that's not so hard to swallow, right?
Exactly.
So this is the managing how much money you're going to make phase. And I know it's rough because you guys are making all this money. So now instead of being greedy, though, we got to look at how do we manage this, right?
Mm-hmm.
How do we collect as much profit as we can while still allowing it to run, because this still has potential, unlimited potential upside always, right? So we got to start looking at, okay, when do I collect some? When don't I? I mean, look at this pop right here, right? But you're going to have to look at it. You've already got your next critical levels, though. You got 176 to 178. As long as it stays above 176, I wouldn't touch it, right?
Okay.
So,
All right. So at the 176, then you're not shedding 50%.
well, if it starts to show me that if it starts to get heavy on the vine, meaning we start to see it slump like this, I will.
Okay.
Right? If it's just consolidating but sitting here, nope.
Yep.
But I will have a stop right here, right? I don't want to. But again, you got to make sure you can afford the stop by how many shares you have, okay? Because it might be, massive amount. And if you can't afford to have a range of a stop, you got to get rid of some. Because
Okay.
it has to work. It has to work in here. If you
Yeah.
can't, otherwise you guys will get stopped out because you're in so heavy. You can't allow it to work, which means you get stopped out, which means you lose exponentially as much as it's going to run, right?
Okay.
It has to work. It still has to work. You still got to let it breathe. And that's when you're going to use that average true range. In this case, it is 29 to 48 cents. So again, this could move up to 50 cents and you should still be able to swallow that even at 1,000 shares, right? This can go up to 176.50. You can still afford for it to come down to 176. If you can't afford that, you're in too heavy. Make sense?
Yes, it does.
Yep. Nice job, though, partner. Congratulations. That's a good trade. Buck over on Twitch says, are your charts set up the same for scalping and EWO? Nope, not at all. So scalping, I'll use a minute or a 30-second time frame. 2-minute EWO, it'll either be on 2 minutes or longer. It can be on 5, 15, whatever, after I've gotten into it. But I do not take a 2-minute EWO and flip it to a minute. Or if I'm trading a 5-minute EWO, I don't flip to a 2-minute or a 1-minute, right? I stay long. Because remember, we can trade anything on this EWO. It can be a 5-minute, a 15-minute, a 1 hour, a 4 hour. If you're right, if you're swing trading and long trading it, it doesn't need to be a 2-minute. It can be whatever you are comfortable with. Now, SPY right here, critical level. SPY bounced at exactly where we said it would be on the gap, up to 502.31, and it's now at VWAP. This is critical. Is VWAP going to be support, or is it going to want to come back down to 500? Do you see it?